Hey everyone, in this video, I'll be showing you guys how to use the AlgoVision premium trading algorithm, its functions, as well as how it's used. Let's go ahead and start off with how to select the AlgoVision. What you're going to want to go ahead and do is go over to the indicators tab here, make sure you're on invite only scripts, and select AlgoVision premium. Of course, this is an invite only script, so you want to make sure that you are invited to it before moving forward. But anyway, go ahead and select on that, and it will appear on your chart like so. Now, if your signals and take profit are all bunched up and hard to see, you can use the right-hand side over here and drag up and down on the scale to make the size of the candles larger or smaller, which will in turn change the distance between the labels themselves. So what does the algo do? Well, the algorithm signifies if we are in an uptrend or in a downtrend, and it does so with these plot trend and plot direction labels. Notice that when we are in an uptrend here, we have a bullish marker on the plot label, and we have this green line right here that is showing the direction of the trend itself. Likewise, if we're bearish, like we're seeing over here and over here, then we are going to see a red line, and that is showing that we are actually in a downtrend. Where it actually shows the change in trend is where we get a candlestick close above the previous trend direction. So notice here, the trend direction was showing a bearish, and then we got this green candlestick close to close above it, making us move into a bullish market where we're seeing a bullish movement through the algorithm. The plot trend is by default selected, but you can remove it by going into the settings tab over here and unselecting from plot trend. And if you don't want the plot direction labels, you can also deselect on those as well. And the plot direction labels themselves by default are off. And the reason for this is that just because the direction labels are going to show a change from bullish to bearish or bearish to bullish, this does not mean that you should enter a position to the long or short side, but rather wait for additional confirmations through the indicators and tools that we are going to mention in this training video. But anyway, let's go ahead and talk about the take profits, the stop loss, and trailing stop loss. The take profits use ATR, which is the average true range, which is a market volatility indicator that is typically derived from the simple moving average. The TPs, as well as the stop loss, use varying levels of the ATR itself to provide accurate exit points on both sides. By default, there are 4 TPs, but you can have up to 10 by going into the settings and selecting how many TPs you would want. To do so, go into the settings tab, scroll down to number of TP levels, and you can have a drop-down menu where you can range from 0 to 10. So if you would like more take profits, you can go ahead and select a higher number. There is also a trailing stop loss that can be used while leaving runners. Also, it is important to use these levels for identifying an exit rather than waiting for the trend to change. What this means is that if a TP is hit, then a portion of the position, if not all of the position, should be taken off as profit while moving the stop loss to the entry level. Likewise, if a further TP is to hit, another portion of the position should be taken off as profit, and the stop loss should be once again moved or use the trailing stop loss. For example, if the second TP is hit, the stop loss should be moved to the first TP, and so on and so forth. Once again, you should not wait for the trend to change from short to long or vice versa to exit the position, as this can result in a reduction in potential profit since you would be waiting for the trend to change, where premium is likely to have decreased greater than expected at. So let's go ahead and look at these on-chart indicators. First, we have the EMAs. And by default, we have this orange one right here, which is our long EMA. But if you go ahead and open the settings tab, you can also include the short EMA. Notice when I go ahead and do that, we have a blue short EMA and an orange long EMA. A good way to think of these two oscillating EMAs is that if the blue one is above the orange one, that means that we are in an uptrend. And likewise, if the blue one is beneath the orange one, that means that we are in a downtrend. We also use a purple cross like the one here to identify whenever there is an EMA crossover, so you can also just have those on your chart as well. When looking to use the EMAs for bullish or bearish confirmation, if price action is above the orange EMA, like we're seeing in this entirety movement here, that means that we are in an uptrend, and likewise, if price action is below the orange EMA, that can be used as confirmation that we are in a bearish downtrend. And once again, to turn off the EMAs, just go to the settings tab, scroll down over here, and you can unclick from these different points right here. Let's go ahead and leave those unclicked, and let's talk about some of the other on-chart indicators. You will also notice that we have another type of moving average that is depicted on the screen. This one is called the whole moving average, or HMA, and typically it is shown with just one single color, but we made some adjustments to how the colors are portrayed. This has been done to assist with directional strength and weakness. There are four colors that are shown. We have a green, a yellow, a red, and a dark blue. The green demonstrates that the trend is fully bullish, where strength to the upside is the strongest. Likewise, a red demonstrates that the trend is fully bearish, where strength to the downside is the strongest. The yellow represents that although we are in an uptrend, strength has decreased and weakness is starting to show, which can potentially be indicative of a reversal incoming. Similarly, the dark blue represents that strength to the downside has decreased, and although we are still in a downtrend, signs of a reversal to the upside are starting to show. The key to understanding the HMA is that you should not fight against the direction that it is showing. If the HMA and plot direction are agreeing on a single direction, then the highest probability of success is to make a play in that very direction. The likelihood of a play being successful is highest when the HMA and plot direction are pointing in the same direction. If they are not agreeing with each other, then it may be better to hold off on an entry to either direction and wait for more confirmation. But it is important to remember that you should not make a play against the direction that the HMA is showing, even if it is showing a color associated with a decrease in directional strength. The color changes should rather be used to let you know that if you have runners, then you should probably reduce position size, as the trend is not as strong in the direction as it was previously showing and has potential to reverse. If you do not wish to use the HMA in your trading, it can be hidden from your chart like so, by going into the Settings tab, clicking on Style, scrolling down to where it says HMA and deselecting it here. This will remove the HMA from your chart. We also have pivot points that are overlaid onto the chart. Notice these orange lines right here, and these levels are very strong for showing potential support and resistance levels, as well as a pivot. R, of course, stands for resistance, and S likewise stands for support, and P, of course, stands for pivot. These levels can be paired with profit-taking levels to really get a strong grasp of where to set your TP. These do not always overlap, but if they do and say TP2 overlays with say R1, then it is likely to be a very strong level of resistance that should be used as a take profit level where most of the position should be taken off the table. Also, you can go into the Settings tab and change the pivot type if you would like. Going here and back to inputs, you can also change it from traditional, Fibonacci, Woody, and Camarilla. We tend to use the traditional pivot points as this is probably the most applicable one for the current indicator. But if you would like to explore the other options, you can change them by doing so here. Another thing that you can do is go back into the settings and you can change the period for which the pivot points are showing. Say if you wanted to see the weekly pivot or the monthly pivot or even the yearly pivot, you can do so by selecting on one of these tabs, and those pivot levels will show directly on your screen. Now, these can be very strong for identifying where the weekly point of resistance or weekly point of support are if we are in an uptrend or a downtrend. But remember, the longer the time frame that you use, the stronger that the levels of support or resistance are likely to be. So keep that in mind when sifting through the different periods. But anyways, guys, moving forward, if I scroll down over here, you can also plot the Ichimoku cloud. It's called Plot Ichi Cloud. Just go ahead and select that like I'm doing so here. And you'll notice that we have a nice little cloud that is showing in white here. Now, the Ichi cloud is a collection of different technical indicators that show support and resistances, which are seen by kind of these horizontal levels like we're seeing here, but they can also be used to identify momentum and trend direction. When price action is above the cloud, that means that the trend is, of course, in a strong uptrend. And likewise, if the price of the underlying asset is below the cloud, that means that we are seeing a downtrend. Also, trend signals are strengthened if the cloud is moving in the same direction as the price. For instance, during an uptrend, if the top of the cloud is moving up, that uptrend is getting stronger. And likewise, during a downtrend, If the bottom of the cloud is moving down, then that downtrend is getting stronger, all of which can be used as additional confirmation to enter or exit a trade. But let's go ahead and take that off for now by going over to the Settings tab and unselecting from the Plot EG Cloud. The last of the on-chart indicators is the VWAP, which can be added by selecting on the Plot VWAP button right here. And notice when I go ahead and do that, we get this nice blue VWAP right here with an upper and lower bound. Now, the VWAP stands for Volume Weighted Average Price, and essentially, the VWAP can be thought of as the price that the asset would be if the volume of buyers and sellers were completely equal, or if there was no buy or sell volume at all. Now, the VWAP itself can be seen as a level of pivot, where if the price of the asset is above the VWAP, that means that the buyers are in control and momentum to the upside is likely to occur. Likewise, if price is below the VWAP, that means that the sellers are in control and momentum to the downside is likely to occur. The bands that are shown right here and here are different levels of standard deviation of the VWAP where price is likely to range. Notice that most of the price does range within these two bounds, and these can be seen as profit-taking levels since this is the range that price is likely to fluctuate in. Once again, the VWAP can be used in a multitude of ways as confirmation for an entry or an exit. Let us take a look at the different indicators that can be used in tandem with AlgoVision. The first one we're going to be looking at is the MACD. And by the way, each of these indicators that you're seeing here come in a package with the AlgoVision, so you will have these ones that are optimized just to work in tandem with the algorithm in general. So let's go ahead and select AlgoVision MACD Plus. Now notice this does not look like your standard MACD, but rather it is a bit cleaner and easier to read than the normal MACD. But let's talk about what the MACD really is. The MACD stands for Moving Average Convergence and Divergence. And essentially, when you pull up the MACD, you'll have two lines. You'll have this line that you're seeing right here, and this one can be associated with the movement of the stock and is also known as the MACD line. Now, the other line that it is oscillating around is called the signal line. When the MACD line is above the signal line, that means that we are in an uptrend. And likewise, when the MACD line is beneath the signal line, that means that we are in a downtrend. And this is further accompanied by red for bearish and green for bullish. But also, we'll notice that we're seeing crossovers occur on the MACD. And when we see a crossover on the MACD, that means that we are either moving the MACD line from beneath the signal line to above it or vice versa. Now, what this shows is if the MACD line was beneath the signal line, and now the MACD is above the signal line, that means we have crossed over from a bearish trend into a bullish trend. What typically follows a MACD crossover is divergence. And divergence is when two things are separating away from each other. In this case, it's when the MACD and signal line are separating or diverging from each other. Now, what this indicates to us is that the trend that we're currently seeing is getting stronger. And being that we're currently in an uptrend, this uptrend is now getting stronger. There's also convergence, which is when two things come together. Notice over here, we're seeing that the MACD and the signal line are starting to converge. And that means that the trend at hand, being that we're in a downtrend, this would be a downtrend right here. The trend at hand and this downtrend would be getting weaker and looking to reverse. Let's go ahead and close out of the MACD. And another indicator that we can go ahead and look at is the stock RSI. And that one is called AlgoVision Stock RSI. Go ahead and select that onto your screen. And when you do so, you'll notice that we actually have the stock RSI overlaid with the RSI itself. Now you can change the settings on these if you would like, but what does this exactly mean? Well, the stock RSI is a combination of the stochastic and the RSI. And when we are at these lower bound right here, beneath this level of 20, kind of like we're seeing over here and over here, that means that the stochastic RSI has reached oversold conditions and is looking to reverse. Likewise, when the stochastic RSI is above a level of 80, like we're seeing over here, that means that we are in overbought conditions and we're looking for a reversal to the downside. Now, a strong strategy to use the stock RSI in tandem with the MACD is to look for simultaneous crossovers. If I go ahead and pull back the MACD up again, notice that we're seeing a simultaneous or near simultaneous crossover on the stochastic RSI along with the MACD, accompanied by a bullish signal as well. This would be a strong point to take a long position, as all three of these are confirming into the same direction. Now, note the MACD is a bit lagged, so it generally crosses over slightly after the stochastic RSI, like we're noticing here, when confirmation is to arise. But let's take these off our screen for now and talk about the final indicator. And this one is called the shaft trend cycle, or the AlgoVision trend cycle in this specific case. And the trend cycle, or STC for short, is very similar to the MACD, but reacts faster to changing market conditions due to our more responsive signal line. So notice that when we are in this red over here, that means that we are in bearish, and when it crosses over from red to green, that means that we are moving into a more bullish movement. So this will help you identify those entries slightly before the MACD. This green dot right here is also a buying signal, and when paired with the bullish direction change, it gives a strong confirmation to go ahead and look to take a trade, as this indicator in general is the strongest of the three indicators that we went over today. Now, you should never take an entry on a trade if the trend is fighting against 2 out of the 3 given indicators between the STC, MACD, and stochastic RSI. So what this exactly means is that if the trend change is showing bullish, but 2 out of the 3 indicators between the MACD, stock RSI, and shaft trend cycle are still showing bearish, you should not look to take a trade and rather wait for further confirmation. With that being said, look for confirmation on at least 2 out of the 3 indicators before entering a position to either bullish or bearish direction. Okay, let's go ahead and put it all together with the information that we just mentioned. On my screen, you'll notice that I have the 15-minute candlesticks on the left and the 5-minute candlesticks on the right. To make for this specific layout, you'll want to go ahead and click this button right here and select the double layout, and make sure you have the symbol, crosshair, time, and drawings all synced up as well. And what this does is it just helps you navigate around between the 2 different time frames a bit easier. Now, for a trade to have the highest probability of success, these are the conditions that we are looking for. First, let's go ahead and go over to our 15-minute chart. We are going to look for a bullish or bearish signal on the 15-minute candles. For the purpose of this instruction, I'm going to refer to bullish signals, but the bearish signal criteria is just the opposite direction of the criteria that I am about to mention. If we are to see a bullish signal on the 15-minute candlesticks like I'm seeing here, and if we are also to see a same bullish signal on the 5-minute candlesticks like we're seeing here, that means that the 2 time frames are agreeing and adds as a further level of confirmation to take a trade. But anyway, if both of these are to occur, we're going to want to avert our attention to the stock RSI, MACD, and STC. If the stock RSI is crossing over from bearish to bullish, like it is here, coming out from that oversold conditions, then that would be our first level of confirmation. And remember, following that, we want to see a crossover on the MACD, kind of like what we're seeing here. And remember, the MACD does cross over slightly after the stock RSI, so it'd be a bit of additional confirmation. Finally, the STC is also showing agreement, as it is here, where it is coming out from those oversold conditions and showing a green buying signal. Then that would be all the confirmation that we need to go ahead and enter a trade. Next, we're going to want to make sure that the HMA is showing a nice green color, which it is right here. And notice how the green color actually did change directly on where the signal changed. So this was a very strong point of entry for a play to the upside. Now, if all of these criteria are met, then a long position can be taken with high probabilities of success. Now let's go ahead and take a look at how we can identify an exit. There are multiple ways that you can take an exit that I'm about to mention here. First, you can, of course, use the different TP levels, and notice that we did get a strong amount of those TPs hit, and it looks like we're actually on path to take profit for. But if you're looking to pretty much close out of the position without the use of the indicator, you can use potentially, say, the 5-minute candlesticks here. And what you're going to want to look for is If we're coming out of overbought conditions on the MACD and notice that we are seeing a crossover starting to occur in this general region over here, so you could potentially look to take some off of the table. Another thing you can do is look for, say, where the HMA is going to start changing colors from yellow to red. And if we even see some red occur on the 5-minute candlesticks, that can be used as another point of exit for a position. All of these work for reducing your position size or taking profit in general. But remember, as a trader, you want to use what works for you. So go ahead and play around with these different strategies and different tools and see what you can find out. Now, as always, if the position does not go as planned, you can always use your stop loss or trailing stop loss to exit from a position. But anyway, that about wraps it up for this video here. Go ahead and try out AlgoVision and see what you can find with it.